Hello, this is Derek Iswell, Chief Investment Officer for Shelton Capital Management with a Shelton CIO Minute. There's been a lot of conversation in financial media post Powell's speech yesterday, and most of it has been hawkish. Today, we'd like to step back a little bit and provide a more global perspective on central bank rates and how the Federal Reserve fits into those rates worldwide. At the beginning of the year, expectations were for 2 more Fed hikes and at peak Fed funds rate somewhere in the 5 and 5.25 range. After the past couple of weeks, more employment information and other inflationary data points, the consensus now is for 4 hikes, and that peak or terminal rate, as people are calling it, might be closer to 5.75 or maybe even 6%. Overseas, for the European Central Bank, the consensus has continued to be 6 or 7 more hikes, which sounds like a lot, but they're starting from a lower level. The peak rate in this case is going to be likely around 4%, but this is about 50 basis points higher than it was at the end of 2022. Meanwhile, on the other side of the globe, in Japan, pressure continues to increase on Japan's ability to control their yield curve. And while inflation is tapering off in other developed markets, it continues to rise in Japan, and they're seeing wage pressures they haven't experienced in decades. So what does this mean for international investing? Most importantly, one of the biggest drivers for international investing, the dollar. While the dollar has rallied over the past several weeks, interest rate pressures that weakened it in the fourth quarter of last year and provided strong international returns remain. And so the potential for international investing continues to be strong and is likely to do well during the next couple of years. For more information, please contact your local Shelton Capital representative. This has been a Shelton Capital CIO Minute.